That's right, Telly. The annual Lujiazui Financial Forum keenly watched for unveiling of measures to stimulate markets and the economy. The chiefs of key Chinese regulatory and monetary authorities made a series of announcements. One involves China exploring new ways to manage its finances. The central bank says it's studying how to include government bond trading in its policy toolkit. Let's listen in on what the PBoC governor said.
应当看到，把国债买卖纳入货币政策的工作箱，不代表要搞量化宽松，而是将其定位于基础货币图范的渠道和流动性的管理工具，既有买也有卖，与其他工具综合搭配，共同营造适宜的流动性环境。
Now joining us now is Mr. William Ma. He is Chief Investment Officer at Grow Investment Group to help unpack the spate of announcements. William, good to have you with us from Shanghai. A slew of market reform initiatives announced at the Lujiazui Forum, which, in your mind, is the most significant?
Yes, actually, it's very powerful, if you like, or timely message from the regulator. I think there are three, main area that we are very exciting. The number one is the support of the technology company IPO, in the China market, if you like. A lot of, high-tech company, historically, they're invested by the private equity fund. They're waiting to be IPO. And I think the support of the starboard market, by the Lujiazui, Luntan, when they announced, I think that is a key catalyst to unpack, those value, in particular for the, technology sector. And then the second one, if you like, is the support of a Chinese company listed globally, both, in Hong Kong and in the US, for example. I think this is also creating an exit or a monetization process for those companies to raise further capital after they get listed. So overseas listing is the key, message, if you like. The third one is the long-term money. I think the regulator talk about supporting long-term insurance reform, encouraging long-term domestic and global money to the equity market, which is much more needed. Last but not least, as the soundbite mentioned, I think an anchoring or the helping the domestic investor to invest in the domestic Chinese government bond is super important. Last year, the saving rate was increased by 3x compared to the year before. If the bank saving rate is going down, I believe a lot of domestic institutional and retail investors are interested in buying the local government bond. So activating the local government bond market liquidity is a very important policy, support, if you like.
Let's talk about the reform on the China's tech board. That's the STAR market. Now, IPOs have plunged to record lows after the China Securities Regulatory Commission actually pushed out stricter reviews. What can authorities do to revive trading interest, especially when the Nasdaq, the board it was fashioned after, continues to rally to record highs? It's the other way for the STAR market.
I think there are two areas. One area is to consolidating to ensure the high quality, high growth, really tech focused company would be available and listed in the market to build back, the consumer, the investor confidence on the overall, Asia market listing, in particular on the STAR board, which I think the regulator is doing a decent job, for example, by delisting some of the ST, company, if you like. The second is actually to encourage the high growth tech company to get listed, domestic in the China market. In particular, I think a lot of global investors are interested in the electric vehicle, sector, high-end manufacturing, the chips. The supply of those, high growth, technology sector to the IPO market would be important. As a fund manager, I think it's a good news. But I think at the end of the day, we are seeing which company to be listed. That is the key catalyst, for the investor to go back to the IPO market, locally and globally again.
And what do you make of the timing of the announcement that the PBoC treasury bond purchases are coming, but just don't call it quantitative easing?
Well, I think this is a timely manner because, people are expecting the bank deposit saving rate in China will go down. So at the same time, when bank deposits is going down from an asset manager perspective, money will go to equity market and fixed income market. And fixed income manager, they would buy corporate credit, domestic government bond, and obviously the Chinese government bond. So I think the timing of this announcement and encouragement is part of the policy to encourage the so-called liquidity trapped or in the banking system back to the financial market. So I think this is a positive catalyst. But the key, if you like, to monitor down the road is, in particular, the trading volume, the turnover of the longer duration, longer lockup, government bond. If that is happening, I think the policy is welcome, by the market participants.
The central bank, the PBoC, has also hinted at an interest rate reform, signaling that the central bank, will actually consider moving to a single short-term rate to actually guide markets instead of the current system where several key rates are used. What is the significance of this?
Yes, if you look at, longer term horizon strategic target of the financial, market or the Chinese government is two keys. One key is renminbi internationalization. The second key is interest rate liberalization. So I think the policy right now, the PBoC and the central bank doing is nothing new, but to some extent it was kind of like deferred or interrupted by the COVID situation. So right now, I think anchoring besides the long term, the short term interest rate liberalization is a very key message that the Chinese financial system or the Chinese government trying to activate, the bond trading market, in which there is so much trapped liquidity in the financial system, in the bank deposit. But I think the government is trying to attract or push them away, from the bank deposit so that they can go back to the real economy, equity, bonds, etc.
Very quickly, last question. How do you see the equities market right now in China? Attractive, not attractive?
Well, attractive, but people need to really act to it. I think there is an investor getting into the market, taping a little bit, but at the same time, the key catalyst, if you ask me, would be the earnings. We're estimating the earnings growth in China would be 10 to 12%. If it's sustainable on a quarterly basis, we believe this is a good entry point for the China A-share market again.
William, thank you for those insights. We've been speaking to William Ma. He is Chief Investment Officer at Grow Investment Group.